Hey, what is going on, everyone? My name is Mitesh, and welcome back to another Wednesday episode of my podcast, Cryptos with Mitesh. In today's episode, I'm going to be discussing why miners are selling more Bitcoins than they're creating. On Tuesday, Bitcoin took a pretty big hit, falling 8% from $10,137 to approximately $9,300 in under 5 minutes. The short-lived sell-off seems to have started from some of the larger investors initiating sell orders, with further perpetuated other investors to sell their Bitcoin. And again, this happened very quickly in under 5 minutes. However, despite that drop, according to ByteTree, which is a company that provides data and metrics on the digital currency industry, miners have still sold more Bitcoins than they're generating. The data shows that miners have sold over 920 Bitcoins, while they've only generated approximately 845 within the past 24 hours. According to Charlie Morris, who is the founder of ByteTree, miners hold when the market is weak. Not because they're bullish, but because the market can't take it. When they can sell, it is an indication that the market is well supported, and he also added that the MRI, which is the miners rolling inventory, is currently high. However, while I do personally agree with that notion, I also believe that miners are simply selling when the price is high, and they're keeping or hoarding their Bitcoin when the prices are low and are expected to increase in the future. And as I have mentioned in different articles and podcast episodes, due to the halving which occurred a few weeks ago, we are now approaching equilibrium in which rewards for mining are just able to cover the cost to mine, which are mainly computer costs and electricity costs. At this point, since miners may no longer be experiencing a profitable return, they're forced to hold their Bitcoin until the price increases in order to sell and try and make back some of the money that they're using for mining. It can also be said that since miners primarily operate on cash, meaning they need to liquidate their holdings as often as possible in order to fund the cost of mining, and we can see that from the fact that miners account for the highest percentage of total Bitcoin flowing into exchanges around the world. However, just like investors, miners may want to hold their Bitcoin for as long as possible in order to maximize their return on investment. And according to CoinDesk, Bitcoin is currently up approximately 6% on a week-to-week basis, despite miners running down the inventory by approximately 504 Bitcoins. And according to Nicholas Pelikanos, who is the head of trading at NEM Ventures, a break below $8,800 would see more aggressive selling. $8,500 is the last support before prices move towards $7,000 and below. ByteTree has also said that the miner wallet can be owned by an individual, a company, or a mining pool. And when the coins get generated by the miners and appear in the miner wallet, they are counted as generation. These coins can then sit in their respective miner wallets for days, months, years, or even longer. It is up to the controller of that miner wallet to decide what they want to do and when they want to move the coins. If these coins are generated by a mining pool, the coins will either be distributed to the pool subscribers or sent to an exchange at some point in order to cover the cost of operation. And while I have seen a lot of analysts pointing to capitulation as the primary reason why miners are selling off their Bitcoin, I personally believe that the main reason is simply that Bitcoin was at a high and they wanted to sell in order to make back the cost to mine. And that when the price drops, they're going to hold, and they're going to continue to hold until the price bumps up again. That is the smartest way for them to sell their Bitcoin in order to make money, especially in the current environment where it is harder to make money off of mining. At the end of the day, so far in 2020, we have seen very few cases of mining farms going out of business, showing that there's still a way to be profitable or at the very least break even on the mining efforts. Only time will tell for us to see if miners are truly adopting a new strategy or if they're simply sticking to the previous buy high, sell low mentality. Until then, miners are still mining Bitcoin and the chain is as safe and secure as ever. And as always, should anything change and there be an update to this story, I'll be sure to have a follow-up podcast or article or both, so please be sure to subscribe to know when that goes live. Thank you for listening to today's episode of the Cryptos with Mitesh podcast. If you liked it, please don't forget to subscribe, like, and share. And don't forget to subscribe to updates on my website, cryptoswithmitesh.com. I'll catch you guys on the Friday show. Until then, take care and stay safe. Bye.